Well, it's a very good morning from him, and of course, it's a very good morning from me. I hope you're well. Hope you're well. Hope you're enjoying your Monday morning here in end of March. Clock's going forward, I think, next week, which is great. A bit more daylight, isn't it? Let's go on air, shall we? And get on with our live stream. So, welcome to my weekly live stream. Got a couple of topics for you today, but interesting read over the weekend about the basket of goods for inflation, all those different goods and services coming in. Apparently, cod liver oil's gone out now. Who's ever had cod liver oil since they were a kid? I don't know about that too much. Anyway, we've got some important stuff because, of course, we've got the tax year starting next year, or next month, I should say. So I've got a little section for you about some tax changes. Then we've got a little idea about whispering to be heard, a little influencing technique there for you. And a quick just update for you on the payment systems regulator. So if you're looking for CPD or updating yourself for your CMAPs and your mortgage exams, this is the place to be. And let's hope you enjoyed your weekend, because it was pretty good weather, wasn't it, at the end of the day? Sports results, well, England did well at football. My rugby club didn't do so well. We won't talk about that. Gloucester got beaten by Bath, which was a bit of a shame. But there we go. Such is life, as they say, doesn't it? Anyway, let's get on to our first topic then. I'm going to pop over to the whiteboard for this one. We're going to take a look at some tax changes. So let's pop across there and get ourselves into some tax changes. What I want to look at now with you is just a quick overview of the little tax changes that are occurring in the tax year. So if you're doing your exams right now and you've been given a book which has maybe been out of date, then you'll be able to make sure you're up to date with those numbers. So let's just have a quick look at what we got. So we're talking about tax changes. And of course, we're talking about April the 6th. Let's put April the 6th up there, 2025, which is our new tax year. And that starts in a couple of weeks' time. So not too many changes going on in the last this tax year. So let's summarise some of those for you as well. First of all, when we talk about income tax and stuff like that, so let's talk about the fiscal year changes. Fiscal year income tax. Not a lot of changes, but what you do have is fiscal drag, as we call it. Let's put a big DRAG there for you. Fiscal drag. Now, this means that the numbers for income tax haven't changed at all, which brings everybody into the higher rate band. You probably heard the phrase fiscal drag. So let's just take a look at the numbers very quickly with you, just so we can keep ourselves up to date with that one. You're going to some numbers for you. Pick this up from a tax table. You can get these online. The examining boards have these as well. Now, here's the first page of the tax sheet for you. And if I just zoom in there for you, you can see some of the numbers for income tax. Income tax, as you can see, hasn't changed. There's 24-25 last tax year. That's this year, 25-26. The numbers are all the same. So personal allowance is still the same. The marriage partner's transferable allowance is the same as well. Blind person's roof's gone up a little bit. Rent a room's the same. Property allowance is the same as well. But the important thing is these numbers here for basic rate taxpayers, 37.7, all the same. And what's happened there, as you can probably appreciate, is that we've got the issue with people's salaries go up. Of course they do with pay rises. But the bands for higher rate tax haven't changed, and they're not going to change for a few more years. So more and more people have been dragged into higher rate tax when theoretically they shouldn't really be paying higher rate tax because their income's not enough. It won't be long before somebody on minimum wage will be paying higher rate tax, I should think, as well. So what else have we got then on the income taxy kind of stuff? Well, as you can see here, all your allowances for dividends are very much the same now. The rates for dividend tax is the same. The personal savings allowances are all the same as well. So not a lot of change really when it comes to the income tax side. Let's pop back to my whiteboard here for you. But of course, the big issue there is this fiscal drag, as we call it as well. The major change really, not so much for your exam, but for the world out there, is the employer national insurance. Let's put that up there for you. Employer national insurance. It's been all over the press. Employer national insurance and the changes that are occurring. These are occurring at the beginning of the tax year. That's the whole point. And what's happening is that the rates are going from 13.8 to 15%. This is the amount that the employer has to pay on behalf of all their employees. Now, they pay that amount on the employee's salary now above 5,000. So 5,000 then is the threshold, as we call it. Now, think about that logically. Somebody earning minimum wage who's on 21, 22, 23,000 pounds, the employer's got to pay a large chunk of their salary at 15% straight to HMRC. So anything above £5,000, they have to pay a higher rate of national insurance on their behalf. Employees still have to pay as well, don't get me wrong, but the employer also has to pay a big chunk. This was in the budget last year, and this is the issue that's causing problems in the leisure industry, in the hospitality industry, those industries that employ lots of people at relatively low salaries, where every penny counts because they're having to pay all sorts of bills and costs, etc. And they're going to be feeling the pinch. You'll see hospitality industries going bust over the next few months, year. Pubs, restaurants, cafes, those sort of things. I've already seen nightclubs now closing down left, right, and centre. Not so much because of the costs. Obviously, culture changes. People don't go out to nightclubs so much anymore as we used to do. But this is a big issue, that. Now, the other one, just to link in with that one for you, is the minimum wage. Again, not so much in your CMAP syllabus, but the minimum wage is going up by 6.7%. And so it should as well, don't get me wrong. But this is also putting extra pressure on these industries that employ people at low salaries. It'll change things. There'll be a drive towards automation. You wait and see. There'll be a drive towards maybe laying more people off and maybe not expanding. You don't really know what's going on. Just pick up on those numbers for you. Again, looking at my tax sheet there for you, because I want to do that at the next page of the tax sheet for you. And there's the national insurance numbers there for you. You don't need to know these for the exam at all. But there's the employer rate up to 15%, which is a massive amount. Employees only pay 8%. Employers have to pay a huge amount of money, which is what all the hoo-ha was about. Because they've obviously got this limit, £96 a week. They always work it out weekly, don't they? I gave you the 5,000 figure as well. So huge changes for national insurance. The next one for you, let's just pop across back over here. Let's give you these details. So we've got fiscal drag. There you go. It's a sort of drag again with that one. And you've got your employer national insurance. What about capital gains tax? Now, capital gains tax changed last autumn when we had the financial statement, or whatever they want to call it. He said apparently they're not allowed to use the word budget because it scares people. You can't have a mini budget anymore. But capital gains tax, the numbers have changed here for the new tax year. Broadly, what's happened is the numbers have gone up to different rates. I'll give you the numbers as well. We used to have 10% and we used to have 20% for basic rate taxpayers and high rate taxpayers on capital gains tax. Now that's now gone up to 18% for basic rate taxpayers and 24%. It went up last October, so it's not new. It went up immediately. And what's happened here is that the old extra for residential property has now been amalgamated into these rises. So that's how they got around that, really. So that's just taking out a bit more money from people for capital gains as well. So it's the same as the residential uplift that used to be. The other one as well, just to quickly put up, is BADR. We love an acronym, don't we? Business Asset Disposal Relief. Again, that was in the budget. And the farmers with their John Deere tractors heading into London to parade against this tax rise. And that's the issue that's happened here. I'll give you the numbers in a second. But essentially what's happened is BADR's going up from 10% to 14%. Now, BADR is for business assets, so small businesses. Farmers, of course, are business people, aren't they? Where they can have a lower rate of capital gains tax on disposal of assets. So that's trickling upwards as well. So let's just pick up on those numbers for you using my tax sheet. Let's pop back over here for you. There we go. Capital gains tax. As you can see, the numbers are all confirmed for you. First of all, the exemption hasn't changed, so £3,000 for the year. And again, October 24, these numbers change. Can you see? So there's your UK higher rate band, 18%, or below higher rate band, I should say. And there's within the higher additional rate bands is now at 24%. So basic rate taxpayers and additional rate and higher rate taxpayers pay at 24%. So the surcharge for residential property is now nil. Carried interest is for fund managers, so you don't really worry about that too much. There's your BADR, Business Asset Disposal Relief, 14% now, on a lifetime limit of 1 million. That's what affected the farmers mostly. For trading businesses and companies held for at least 2 years. In a sense, if you've got a trading business or a farm, which is a business, you can have up to 14% on the 1 million now. Of course, that's all changed for the sake of that, really, when it comes to it. So that's your capital gains tax. Let's just pick up on one more there for you. ISAs and things haven't changed. There's your ISAs, your GISAs. All those numbers are very much the same as were last year as well. VCTs, EISs, all the numbers are the same. So no change there whatsoever. Okay, let's just pick up on one or two more. Back to my whiteboard for you. I hope this is useful, by the way, as a little update for you. You probably know this anyway, but it's always good to have it confirmed, isn't it? To say the least. Now, big change for you, particularly in the mortgage market, is the stamp duty land tax. There you go. So property market. They've been tinkering with this for years, and the big change is first-time buyers. They keep reducing it, then increasing it, then reducing it, increasing it. It's all a bit of a kerfuffle, as they say as well. So that's a change. So let's just confirm the numbers. Let's get you back into these, because there's a lot of confusion, a lot of change. So, you need to be aware of what the numbers are on this one. So let's just pop across here for you. And we'll give you some slides as well on this one as well. So what do we got? Stamp duty, as you can see there, stamp duty, property transaction rates. Now, these are in England and Northern Ireland. They are different around the world, around the country. And you see you've got this new 2% one now has creeped back in again now for residential property. First-time buyers, it's now 0 up to 300 now on properties up to 500,000. That's come right down for first-time buyers, so they've been affected by that as well. And the surcharge now is going up as well for all very difficult surcharges. I'm going to give you numbers on that in a second for you. Let's just flick ahead for some more slides for you. Let's just give you the numbers. Here we are. Now, for main residential home, let's just pop in and so you can see me as well. Let's pop across here. For your main residential home, which we all live in, don't we? What are the stamp duty rates? Well, let's just confirm those numbers for you. From April 25, you've got 0 to 125 is now the 0%. It was up to 250, remember? So now you got your 125 to 250 at 2%. They brought that back in again, if you like. So everybody, second-time purchasers, will have to pay higher stamp duty, which is bad news, isn't it? Then you've got the big chunk, 250 to 925 at 5%. And then you got your whopping one at 10% as well. And then finally over 1.5 million, 12%. So it's horrendously expensive. Next week on the live stream, we'll do some calculations for you with lots of different examples of stamp duties just to work them all out for you. Huge. Additional residential homes. So if you're buying a second home, not buying your second property, selling the first one, buying a second one. Like my daughter, they're selling their first flat and buying another flat. They're going up the ladder. Now that's not affected by this. Some people think it is. This is when you've already got a main residence somewhere, but you've decided to buy a second home because you can. Now they have to pay a lot more. And the second home rate is now plus 5%. That's pretty steep. Plus 5% on top of the existing stamp duty, which is high. And again, we'll look at some calculations next week for you. Now, the first-time buyers are the ones that have been hit. Now, this is for properties below 500,000. So that's a pretty hefty property for a first-time buyer, of course, but maybe not in parts of London. So what are the rates for first-time buyers then? Well, this is the new ones for this tax year. 0 to 300 is now 0%. That's the bonus they have. That's the benefit they get. It used to be a bit more, of course. Now they have to pay 5% above 300,000, as you can see. Then, of course, it goes to the normal rates that everybody else pays. So pretty big, that. A lot of changes there on the stamp duty side. So you need to be aware of those as well. A couple of other quick changes for you. Let's sneak this one over here for you. We've got furnished holiday lets. So you got your furnished holiday lets. That's just that's a nice little. There you go. It's not a telephone. That's a thatched cottage. Let's put the chimney there as well. That's a furnished holiday lets. They're all changing. The numbers, the rules for those are changing, and it's not so tax advantageous anymore. And couple that with these councils doubling the council tax on second homes now. People have second homes in places like Cornwall and the Lake District. Then Wales, they're doubling, trebling sometimes the council tax. It's horrendously expensive now to have a second home, particularly by the sea. But if you've got a furnished holiday lettings, which is all about rentals for the tourist market, the tax benefits are being reduced dramatically for the new tax year. And the final one for you, just to give you the numbers, let's just put a little line there so we can divide that up for you, is non-DOMs. Remember the non-DOMs? So there's a picture of the UK, there you go, and there's a little picture, there's Spain and Europe and everything here, Denmark and everything. There's the UK. So somebody is a non-dom. They were getting some really good advantages around that. That's all changing now, and worldwide assets are going to be charged at 40% for inheritance tax. So you'll find a lot of these non-doms now are sailing away. There you go. There's my little sailing boat. They're leaving the UK and heading off. So non-doms, the tax benefits are changing. That's been mooted now from last year. I think the Conservatives decided they were going to do that, and Labour have kept it going as well. Again, we'll do another live stream on the changes for you in a few weeks' time if you're interested. So that's just a nice little update for you of some of the changes. Hope that's been useful. Bye. Good. Okay, let's just give you one final topic then, and then we'll do the sales idea for you. The final topic was the, well, it's very simple. I'll just pop across to the whiteboard over here and we'll talk about this one for you. Now, this one is just a really quick topic for you, the abolition of the payment systems regulator. You might have heard about it. So what have we got here then? Well, we've got this consumer, which of course we all are consumers, aren't we? We've got this consumer who's a little bit confused now. Why are they confused? Well, they're confused.com because there's too many regulators out there, which the government have recognised. You know, you've got the payment systems regulator there, you've got the FCA as well, you've got the Ombudsman, you've got all sorts of regulators, and they reckon there's too many of them. And arguably there probably is. As a result of too many regulators, the government also think we've got too much, you like this one, wouldn't you? Red tape. I like that too. Too much red tape. Quite right. So all the government decided to do is to start to amalgamate them into big ones. Now the big regulator, of course, is the FCA. That's the super regulator, if you like. And what they're doing is the payment systems regulator there is just merging. So the payment systems regulator, the work that they used to do regulating payment systems, good name for it really, isn't it, is now going to be taken up by the FCA. Simple, cost savings, less red tape. Will it? Probably not. It'll probably be the same people that work for the payment systems regulator will just get a job at the FCA and they'll open up a floor on Canary Wharf to house these people. They'll probably spend a fortune on redundancy payments and 2Ps and all sorts of things. So I don't really know if it's a major advantage, but we'll wait and see. So that's the abolition of payment systems regulator. Very quickly done for you. Hope that's been useful. Alrighty, okay. Let's finish off then, shall we, with a nice little sales idea for you, really. This is one of my little techniques that helps you when handling customers. And this one's called Whisper to Believe. So I want to take a look at Whisper to Believe and what that one's all about for you. Now, when it comes to whispering to be believed, shh, don't tell anybody else this trade secret. Now, do you know that something is all about whispering, isn't it? Do you know that if you whisper something to someone, the chances are they'll believe you? It's psychology, and it works too. I'm not saying that we should be lying, heavens to Betsy, but if you whisper, sometimes people actually will believe you. But I am saying that if you want to influence someone with your idea or notion, try whispering the idea and you'll be more influential. It makes sense if you think about it. When we whisper, people lean forward to be able to hear us. It appears that whatever is going on to say is not for public broadcast and is therefore important as well as true. Now, you could use this whispering technique in a number of places. When you're observing and coaching somebody on a field visit, try giving your feedback in the form of a whisper. In presentations, occasionally lower your voice for important messages. If you're all mic'd up, whisper for extra influence as well might be useful, won't it? With customers, lower your voice when you're coming to present your solution. And if you're close to them in a quiet place, whisper for extra influence. But shh, don't tell anybody else this trade secret. I hope you enjoyed that one as well. All right, let's just wrap up our live stream today. Hoping you've enjoyed yourself. A few updates there for you as well. As always, make sure that you get onto our mailing systems. Let's put that up there for you as well. We've got a few things going on now. We've got the DIP-FA starting next month, which is interesting. So you want to take 9 months and get yourself authorised as a mortgage advisor into a financial advisor, then DIP-FA is exactly where you want to go. So we've got that coming up as well. And lots of changes, lots of new videos for the boot camps and things as well to help you along the way. Other than that, I wish you to have a fantastic few days. Enjoy the sunshine, and I'll be seeing you in a couple of weeks' time. We're not doing next Monday because we're up in Scotland. A bit of a break. So see you next couple of weeks. Bye.